Welcome to FXStreet Currency in Play. I'm joined by Marc Ostwald, strategist at ADMISI. Very good morning to you, Marc.
Good morning.
Right, let's look at the headlines, top trends there. Euro, US dollar. Euro's trading flat with the US data headlining today. Obviously with CPI and retail sales, I guess it's going to be very dull and quiet.
Well, it's going to be dull and quiet ahead of those numbers.
Yeah.
If there are any surprises in them, and they're going to be quite big numbers, we're looking for a big gain in headline retail sales, solid gains in the core measures. But above all, if the inflation number, which is what the market's fixated on at the moment, does pick up more than expected at the core level, so the market's looking for 0.2%, at the core CPI, which would leave it unchanged year on year. But if that were to come in higher, then some of the market doubts about whether the Fed actually is going to go in December might need to be taken away. And that in turn is a reminder, particularly with the ECB knocking on our door every day, basically saying we are going to be doing QE for quite a lot longer, and long after we stopped QE, we won't be hiking rates. And so that rate differential between the US and Europe is still going to start widening, and that really favours the dollar.
Understood. In terms of dollar yen, bulls trying to defend this 112 handle. Chart doesn't look great. What are your thoughts on dollar yen?
Yes, I think at the moment, with so many troubles in the world, be they Korea related, be they NAFTA related, the yen still has that sort of
safe
haven, and it's not really being in any way undermined by the fact that the Japanese have got this election coming up, with most Japanese media outlets suggesting that polls that Abe will win again, so you're not seeing much prospective change there. What we really need is for things to calm down a little bit geopolitically, and then the lack of attraction in Japanese interest rates and the obvious attractions, as I've just mentioned with the euro, in the dollar, probably starts to weigh quite heavily on that. And we've seen these sort of trends develop before, and everyone's saying, well, it's not going to move higher, and then suddenly the next thing you know, it's 118.
Understood. And in terms of cable, sterling trades higher on Brexit talk hopes.
Yes, well, there are some hopes that they may start broadening out the scope of their discussions in December, but I think one should tread warily here, because the ping pong or back and forth on this is quite substantial.
Okay, let's talk about something we do understand, the dollar index. What are your thoughts there?
Well, as much as we are fixated in the general scheme of things on what's going on with the dollar-euro and dollar-yen exchange rates, I think this, which has the white line is the US dollar index, the green line is the Chinese yuan versus against the dollar, really tells us what's calling the shots here in terms of the dollar's performance, and it is definitely the yuan. So we saw that recovery in the dollar primarily related to the stop that we saw in the yuan's appreciation this year. If we recall, back at the top of the year, when we were almost at 7, everyone was saying yuan's going to 720. The Chinese decided to change things around a bit, stop people selling the yuan forward, and we had that huge yuan rally.
Yeah.
One of the things which supports the yuan in all of this, and this is where the contrast stands with the other one, is obviously the Chinese yield curve is very flat. So you can get 3.5% on 1-year yuan paper, and a lot more in the corporate area. And so the carry, for as long as we're not overly, we're fretting not too much about central banks taking the punch bowl away from the table in the developed world, into yuan is very, very attractive. And I think that's something which does support it. And the authorities in China obviously will be, are trying to keep a lid on it, but they're also looking across at Trump and knowing that they don't want to see the yuan basically depreciate against the dollar, because heaven knows what he does next.
Understood. Let's go on to crude. Delighted to say that I paid 112 at the pumps last week. We were saying off-air that this looks, like a series of higher highs, higher lows, just gradually, but, a nice uptrend.
I mean, we've had all the monthly oil markets reports, IEA, EIA, OPEC this week. Somewhat divergent picture. The EIA in the States was saying global demand may be slightly less than they expected. OPEC saying more, but that's probably talking their own book. But the final arbiter, obviously, is the IEA, the International Energy Agency, which came yesterday. And they're basically we're getting to this stage where, yes, the supply overhang is clearly there, and it's not being eroded as people were originally expecting. But we always have to look at this in context, because it's as much about oversupply and build-up of inventories as it is about global demand. And I think global demand is doubtless strengthening. And for that reason, one can see this very gentle rally that we've got in oil carrying on, and probably we get to the end of the year we're somewhere closer to 55. It's not going to be a wham bam thank you ma'am type rally, but it's gently higher.
Okay, so let's wrap up with the calendar. Retail sales and CPI numbers today. I guess they're going to move the markets one way or t'other. Final thoughts.
Yeah, well, we've got on there a lot of central bank speakers today.
Why are there so many central banks speaking at the moment?
Because it's the IMF World Bank meetings, annual meetings in Washington, and they're pretty much all there. It's also a case that the Fed wants to keep the market honest, and as much as some of the doves have sort of said they're not necessarily happy with US rate rise in December, the majority of the FOMC still basically wants to keep that firmly on the table and make sure the market doesn't price it out. And with the ECB, we are getting to that point where, at the end, towards the end of the month, we are going to have the ECB probably the announcement of what they're going to do next year, and they're trying to give us some guidance so that when we come to the October 23rd meeting, it's not going to be a surprise.
Mark, as always, thank you very much indeed.